Hello, this is John Bell from the Office of Multifamily Housing. Today's session is going to be an introduction to the Tax Credit Wheelbarrow. As most of you know, the Mortgagee letter 2014-05 required that wheelbarrows be submitted for every project after June 28th, and for tax credit projects satisfying this requirement should be done by submitting a tax credit wheelbarrow. Today's session should take not more than about 10 minutes, and we do have a set agenda. First, I'm going to discuss what the goals for today will be. Second, I'm going to describe what tax credit wheelbarrow is and why we have it. And third, I'm going to give you a short little tour, open the Excel sheet, and show you what the report looks like, which is a 27-page report. Then I'm going to do what's most important, probably from your point of view, which is to identify the 5 parts of the wheelbarrow that should be the most useful to you. And importantly, these are the 5 things that we've discussed internally. So these are things that our staff is going to look for. There'll be a small recap, and then a time for questions and answers. The goal of today's session really is twofold. First, that you feel confident that you can tackle this wheelbarrow and you'll be able to look at what's important. And second, you understand that the wheelbarrow is only a small part of what you're submitting, and we are eager to use it as a tool, but it won't determine the final outcome of your application. The original wheelbarrow was created as a way of capturing data in digital form that previously had always been submitted in paper documents that weren't really able to be manipulated. We asked for a data sheet from lenders, and you were all very good to accommodate us. And this data we would put into a report. Some of you hadn't seen the reports before, but the Tax Credit Wheelbarrow actually does include the main report that we used and the data sheet. So filling out the data sheet and seeing the report is part of what we're trying to do here. The report that's generated through the data that you input into the data sheet appears in a separate tab in the Tax Credit Wheelbarrow. Some of you haven't seen this report before, but this will give you a chance to see where your data goes and what we looked at. As I back out, you can see that it's a 7-page report, pre-formatted within Excel to produce a standard format as well as a standard 7-page report. You can see that the Tax Credit Excel file will produce a standard 27-page report if you print all of the sections from each of the tabs. This report output will have to be edited in an Adobe editor so you can paginate it in the order in which we want it, but it's not very difficult to do that. You'll also see that we have a publicly available site in which to download the wheelbarrow and download the instructions. I'll click on that and you'll see how it works. I want to leave with one important note, which is that we've had 80 applications under the Tax Credit Pilot, each of which has submitted a wheelbarrow, and in almost all cases they've done an excellent job in preparing it. So you should have confidence that you can do it. Here is the section of HUD.gov which relates to the Tax Credit Pilot program. If you click on the link, you'll get to this. As I zoom in, you can see where the Appendix C1 and C2 are for links for the Tax Credit Wheelbarrow Excel sheet and for instructions on how to fill it out. The instructions run about 4 pages. I think if you follow them, you'll actually be able to fill out the wheelbarrow probably in about 3 hours for the first one, 2 for the second, and maybe only an hour for the third, especially if you link the cells in the wheelbarrow to the cells in your own Excel sheets. When you click on the link that drives you to the Excel sheet, you'll get this dialog box. Usually you can save it to whatever location you want and name it whatever you want. When you open the Excel sheet, which is the Tax Credit Wheelbarrow, you'll see that it has a number of tabs in the bottom. The tab which is most important is probably the section called Mortgageable and Non-Mortgageable Costs. You'll fill it out as you have in other cases of FHA programs by filling in the blue background cells with data, and anything that's not a blue background cell is calculated or read from the data that you fill out. We've added some relatively sophisticated aspects to this, including pull-down menus that allow you to give every expense, whether it's mortgageable or non-mortgageable, a category within our standard 7 categories. Again, this helps us produce standardized reports. I think in the private sector, this is pretty much how things work. This sheet, which is in a separate tab, captures almost all the information that's most relevant to a deal. We'll discuss this a little bit more later in the introduction, but I thought it would be worth taking a look at right now. If we go to the tab called the Sources and Uses, you'll see that this is actually a jam-packed tab. It has 16 different formatted pages, and a number of these include pretty crucial information for getting the right information into the summary. So this is where probably you'll spend most of the time that you spend working on the wheelbarrow. Again, it's all pre-formatted. If you click print, you'll see it print out according to the pages as they're laid out here. What we're looking at now is a PDF of the output from the Excel sheet. This is the standard 27-page report, and in it I've highlighted those 5 sections that we're going to pay most attention to during the next 15 minutes of this presentation. You can see in this close-up of the top of the PDF that this is page 1 of 27, and what I'll be doing is referring back to this to go to the page I want to highlight in this presentation by putting a new number in here. Where the 1 is, I'll put in the number of the PDF page that takes us to the section on which we're going to focus. The first section on which we're going to focus is that portion of the spreadsheet that calculates and displays the mortgageable and non-mortgageable costs. And this is important because it actually is one of the reasons that we created the Tax Credit Wheelbarrow. We were getting a lot of information that was an accurate depiction of what was mortgageable, but a lot of the non-mortgageable costs and a lot of the non-mortgageable cost sources weren't recorded. So when we look at this, we look to see if the sources and uses balance. We look for the mortgageable costs that might not fit in the normal categories of organization. And what we've told folks in our staff is if they don't seem right, look at the details. This is page 2 of the index, which is page 3 of the PDF, which is how we'll navigate there. You can see here that we have a standard categorization of all of the uses for the project: land, hard costs, fees. In this case, we're using a project that we've made up called Fairfield Apartments, which is an $11 million project. We can zoom out here and see that it's broken down into mortgageable and non-mortgageable costs, and the mortgageable sources balance with the mortgageable uses, as does the non-mortgageable sources and the non-mortgageable uses. This second section on which we're going to focus is the tax credit equity and permanent sources of capital. This exists in large part, again, because we weren't getting details about how much equity is coming in and when it was coming in, and we weren't always getting a good description of the non-equity and non-FHA mortgage sources and some of their terms. So this gives a much more robust picture to us of what the project looks like. What we instructed our staff to do is look to see if all the permanent sources are listed, and look to see if the amounts are correct, and look importantly for any bridge loan. Sometimes it's not well indicated that it's a bridge loan, but in this case, it not only is indicated how much it is, but how much is going to be used at closing. Here in the Excel sheet is the tax credit equity and permanent capital sources section. You can see here in the blue background cells that you will be filling out the payment description, the amount of each payment, and how much will be at settlement. And below this, you'll see other sources. Obviously, the FHA mortgage is automatically calculated, and below that, in the blue background cells, you'll put in information about other sources. This third section in which we're going to focus is the 2264 and the 64A. In the tax credit pilot, it's not necessary to submit a separate paper version of the 64 and 64A. For your purposes, you'll have to submit it, and the intent here is to make sure that the information that goes into this is consistent with your other forms. This section, which is a separate tab, may take a while to fill out the first time, but we're confident that you'll be able to do it, and the information will be very useful to you to see in the format in which it's done. Here is the first section of the 2264A tab, and below it will be a second page, and below that will be the third page. Again, as we scroll down in the Excel sheet, you'll see this page. Scrolling further down yields the section about the summary sources and how much has to be secured at closing to allow the project to close. You'll see down here that all the sources balance. The fourth section on which we ask you to focus is the draw schedule. We've tried to make this easy by combining each draw into 6-month periods. We're seeing many different kinds of draw schedules. Some wouldn't even fit on a 5x5 spreadsheet. It was just too much information, monthly, and too many sources and uses. So again, we've simplified it, and we think that this makes sense. It gives us a chance to see when money's coming in and that indeed the payments balance. So what we look for, do each 6-month period balance? Is the timing right? Make sure the first period amount is larger than the settlement amount, and obviously it's important here to look at bridge loan payments and pay loans. So this is the draw schedule, which is a separate tab. You can see here that it lists all the sources and all the uses that are taken from the different section of the spreadsheet, and asks you to put percentages in for the uses. This is what drives each period. Under the uses section, it's important to actually type in dollar amounts, and obviously what we're looking for is to make sure the sources balance with the uses in a period, and there's consistency between availability of funds, for example, tax credit funds, bridge loan funds, and other sources. The last section, which is actually one of the first ones you'll see in the report, is the executive summary. And we do this not because we think that it's not worth focusing on first, but rather much of this is a result of work done elsewhere. And it's worth noting too that it's a great source of general information. So you can look at the sources and uses, you can look at the operating budget, unit details for 5 different types of units. Consolidated is there. Some of the important benchmarks that we look for, you probably look for too, are in there: the average rent and the per unit per annum expenses. There is a small section on the lower left about the loan terms and a summary of the 64 and what criteria is used. There are also important tax credit details, such as the credit source and the price, how much is acquisition, how much is rehab. And then finally, there's some information about the appraisal, that is the land value, the market NOI, and the cap rate, that we and you, I think, would find very useful to see in a single place. Here is the tax credit summary, and although I'm not in a position now to move around to show you the different sections, I think at your leisure you'll be able to look at this and explore those sections that are important to you, and again to make sure that they're consistent with your application and consistent with all of the details that you've put into your application. This is the summary of sources and uses, not the mortgageable and non-mortgageable, just to consolidate. Also shown is an operating summary, and at the bottom, debt service coverage. Moving down, you'll see the FHA loan terms and some useful benchmarks. This section includes information about the different criteria upper right corner is information about the project valuation purposes, the amount paid to acquire the project, the cap rate, the market NOI. That's all here. And finally, there's a section which includes information about the tax credits, total credits, price paid, the amount of credits allocated to acquisition versus rehab. And that ends our overview of the executive summary. This ends our introduction to the Tax Credit Wheelbarrow. We look forward to seeing your submissions, and if you have questions, please give me a call. This is John Bell from the Office of Multifamily Housing.